Sandeep Tandon joins us now. Let's take our conversation forward. Adani Group of stocks have bounced back. Markets are looking much more stable than what they are. Sandeep, make sense of the market madness. What spooked the market on Wednesday, then on Friday? Do you think it was only about Adani Group of companies and the domino effect it had on the market?
So, Nikunj, it could be a combination. If you really look at the last 1 month or so now, India has been underperforming. Okay, so whenever you see underperforming happening related to China or related to US also this time, so it's obviously hot money, the ETF money or passive fund money moves out. So that pressure we have seen in nearly last 1 month. Okay, and with that background, this event also got triggered. So we added to the fuel. So that's the way I look at. I think it was more of a event which unfolding and the background was weak. The conviction is people are generally closer to budgets. Also, people are slightly nervous. So I think it's a combination which played out rather than saying just one specific thing which played out. Obviously, that got triggered. That's the way we look at these markets.
You've had exposure in some of the Adani Group of names. As an investor, given that the concerns which have been raised, are you worried or you think they would be addressed?
See, I tell you, Nikunj, I always say what is reality and what is narrative. Okay, market and is very different. I have seen these things in the past many times. Even some of the largest corporate houses. Something similar has unfolded in last many years. So, one business rivalry, and other aspect is we have to look at. We don't get into any of these narrative. Our focus is pure numbers, whether we bought these stocks at right price and whether we'll sell these stocks at right price. That's the way we define. So we had some exposure in the past in some of the names. We pruned down some of the name at some of the virtually at the top of the cycle. And some names we still own it. So I think these are the India-centric infrastructure themes which we believe should play out very well. And it is very, very unfair to say that we don't want to participate. We have seen this narrative for many times. So we are not that disturbed. This is a part of this business. Sometimes people tends to overreact. Okay, but as long we have a clarity and conviction that we are buying holding a good names, we are not that upset or worried about
being, I'm trying to address the market, flavor here.
it.
If the FPO goes through, do you think markets will be happy and relieved and that technical factor is over? Or that is something which markets are not bothered about?
No, I think definitely, Nikunj, it is a sentiment thing. The issue has sailed through. So right now, the uncertainty is all about whether issue will sail through or not. So I think once it sailed through, that event will be behind us. Okay, and again, good company name, cash flow based companies should do very well. Where valuations are right, or I think all those names should come back. Okay. So I think the event is important, and event is also unfolding closer to budgets background also, which is technically we call it non-event, but when it unfolds, people are generally cautious and worried about it.
Uh, Budget. Two scenarios. There is a change in the tax rate for long term and short term. That's scenario number one. Scenario number two, no change in tax rate, but the duration is changed. Long term, which is 1 year, becomes 2, or it is equated to other asset classes, which is 3. So, what could be the market reaction in scenario number 1 and scenario number 2, tax and tenure?
So if let's say scenario number one, when they hike the taxes, or with that background, market can be spooked maybe for few trading session, it can correct a bit furthermore from whatever we are at current level. But if you look at scenario number two, where they only take the tenure, okay, then that could be just a temporary setback, and I think will come back. Okay, market will come back. So that's the way we look at. But if you really look at uh, our own background, market has already corrected. So let's look at the background of the budget now. And let's say assuming something unwarranted builds in the prices or builds in the event form. But market is very light. Leverage position has been thrown down. People are sitting on a reasonably good amount of cash. Perception is very negative. India has seen a relatively underperformance, significant underperformance in last one. I think background is there where the dent should not be very meaningful, because if we are getting into a budget with this sort of, let's say, shock, okay, and if we have a very high leverage position, everybody is in euphoric mood, then the dent could be very, very meaningful. but the background is very different. So market is relatively light. If you look at, we look at the quant fear index, let's say last 2 days of or last 3 days when this fall is unfolded in a big way, whether it has also spiked, but it is not spike up to that extent to say a reversal, but it can settle down in next few trading sessions. So we are closer to that event. Okay. So which means downside may not be very significant from the current levels. Even let's say something which market is not anticipating or worried about in terms of taxation unfolds also. Then also market background is very light.
Sandeep, hi there. Morning. The PSU banks, without a doubt, had a pretty stellar calendar year 2022, a near 70% run up. Do you think that this is likely to continue, or now are the heydays for some of those PSU banks perhaps behind us?
So I think I always maintain that I still believe that value as a theme is still in the very early stages. Okay. Now, when value has outperformed significantly and we are seeing small correction happening there, because I always believe that no moves will be very linear. But given the background which we are looking at, the value thesis will outperform. With that background, I think PSU banks will continue to outperform in a longer term perspective, both medium and longer term perspective. But the way I will look at, I will like to avoid all the stocks where FI ownership is on a higher side, given the background which I just explained that we believe that India underperformance. I have been saying for a couple of last 2 months or so, from November onwards, India has potential to underperform China, Indonesia, and now it is even US. With that background, there might be pressure on the FI's perspective, from the outflow perspective, passive funds coming out. With that background, I will use additional data points in terms of FI ownership. Any sector or stocks, particularly which has very skewed FI ownership, I will like to avoid or like to have less exposure. Okay. But given the PSU bank, the under ownership is there within the domestic market itself. FIs hardly owns anything. If you leave top one or two names, I don't think FIs really owns PSU banks. So that way is the space is actually quite good. The FI's presence is not there. So unwarranted pressure, which can get built into the outperform or the outflow from the passive fund perspective, I think that risk is also on the lower side in the PSU banks.
Good morning, and Nentar also joining in on this conversation. So you like banking stocks, particularly if there is low FII ownership. Then why
Yes.
did you own HDFC Bank? We started to see the elephant begin to dance as well.
Okay. So very interesting question. So let's look at we have recently built this exposure. If you look at our fact sheet data, we actually exited from ICICI Bank in the month of September 2022 and shifted towards HDFC Bank. The reason was very simple, that ICICI Bank was trading in the most admired territory, and HDFC relative, again I'm using what on relative basis, has hit a neglected zone. So it was a good trade which worked out very well. And I think still believe that we have seen extreme negativity in HDFC Bank few months back, and that background is set for a better outperformance over other private sector bank. That's one of the reasons we own HDFC Bank.
Sandeep, I know you're not that frequent on Twitter, but one of the top trends today is LIC Zinda Hai. And it seems like you believe the same.
So I tell you, see, when people tend to make mockery of the longer institutions, and that's the way emotions, that's the reason I always bring the concept of narrative, okay, versus data. So narrative can be anything. We are not too much upset about it, but ultimately we look at data. When we look at the valuations are very attractive in some of these names, okay, we tend to participate. I always said that 2023 will be more volatile, okay, and when it's a good opportunity, when there is a capitulation, the fear is very high. That's a time to rebuild your exposure or increase your exposure, as compared to when we have seen a euphoria and people tend to participate. So you have to play very smartly this year, given the background, we're saying it'll be more volatile than 22 also. With that background, I think I will like to play with the good amount of safety and look for additional data points rather than just getting carried away with whatever narrative is prevailing in the market.
Thank you, Sandeep, for sharing with us your time, giving us your view on the markets, the budget, as well as your sectoral preference.